Do you have a home that you have significant amount of capital gain in? Capital gain beyond your exclusion level of $250,000 per person or $500,000 for a married couple? And if you do, there are options for you to eliminate capital gains tax, believe it or not. And it's by using two different tax codes. The Internal Revenue Code 121 allows you to take $500,000 a married couple living on the property on title, tax-free money of the gain. But if your gain is greater than $500,000, what do? Well, one option is to create a real estate plan to eliminate your capital gains tax and actually do a 1031 exchange with your primary residence. And most people say, well, you can't do a 1031 exchange with a primary residence. Well, let me just show you how that looks. So the IRS says that a primary residence is something you lived 2 out of the last 5 years. So a person comes to us and says they want to sell here. Well, instead of selling here because they've lived in it 2 out of the last 5 years, they could, but they've got more than $500,000 of gain. So what we suggest is instead of selling today, move out for 2 more years and then you sell it. And so now you have these 3 years that are still primary residence. You get your $500,000 capital gains tax exemption. The other 2, you buy an investment property, you rent out your home, and then you prove to the IRS that's an investment property for 2 years. You pay income tax on that rent. So the IRS knows that you have an investment property. And then you sell it 2 years later. And you use the 1031 exchange as well as the Internal Revenue Code 121. You can combine 2 tax codes to eliminate your capital gains taxes.